Why it's not too late to buy Bitcoin. Bitcoin stands as the reigning champion of the crypto realm, boasting millions of enthusiasts worldwide who are eagerly clutching onto their Bitcoin with hopes of stellar returns. Beyond merely being a digital asset, Bitcoin has cemented its status as a viable currency for transactions, presenting both consumers and merchants with an additional avenue. However, a burning question arises. Is the ship for investing in Bitcoin sailing away? Or is there still a chance to hop on board? In this video, we're delving deep into the annals of Bitcoin's price trajectory, dissecting its historical patterns, and scrutinizing whether it continues to hold long-term value. So, is it too late to buy Bitcoin? Bitcoin has indeed earned its stripes as a seasoned veteran in the cryptocurrency arena. Its evolution from a revolutionary concept to a mature playmaker in the market has brought about a shift in dynamics. Now, the stability associated with Bitcoin is a double-edged sword. While it dampens the wild price swings that can be nerve-wracking for investors, it also implies that the days of exponential growth, akin to its earlier years, might be less likely. The crypto landscape has witnessed significant changes, and Bitcoin's traditional role as a store of value is juxtaposed with concerns over its utility and the energy-intensive process of mining. Speaking of utility, this is where Bitcoin faces scrutiny. Unlike some newer cryptocurrencies that boast advanced functionalities or innovative use cases, Bitcoin's primary function as a digital gold or a decentralized currency is well established. Yet, this familiarity comes at a cost: the lack of surprises or additional features that could reignite a fervent rush among investors. One prominent factor contributing to the subdued enthusiasm is Bitcoin's energy-intensive mining process. As the world increasingly shifts towards sustainable practices, Bitcoin's carbon footprint raises eyebrows. This not only impacts its environmental sustainability, but also adds to the arguments against its long-term viability. Furthermore, the landscape of Bitcoin investment has undergone a notable transformation with widespread acceptance among institutional investors. This increased institutional participation has played a pivotal role in taming the once volatile nature of Bitcoin. Beyond individual holdings, Bitcoin has found its way into various crypto index funds, marking a broader integration into traditional financial structures. While the embrace by financial institutions lends a decree of legitimacy and stability to Bitcoin, it also raises a crucial point. The era of Bitcoin's astronomical 4-digit growth might be a thing of the past. The infusion of institutional capital and the shift towards a more structured investment approach could contribute to a more measured and tempered trajectory for Bitcoin's value. Now, circling back to the central question, is Bitcoin a wise investment now? Let's dive into some major factors that can significantly influence your decision about investing in Bitcoin. Bitcoin price history. People often ask, is Bitcoin still worth investing in? Yet fail to understand the coin's price history, which can help inform future price moves. So let's take a dive into it. The mysterious Satoshi Nakamoto laid the groundwork for Bitcoin's inception in 2008, releasing its source code to the world in the early days of 2009. In its nascent years, Bitcoin faced skepticism, often dismissed as a whimsical concept. Its early adopters primarily lurked in the shadows of the internet, with platforms like Silk Road providing a clandestine stage for its use. The allure of Bitcoin's anonymity, owing to its peer-to-peer nature, inadvertently earned it a reputation for facilitating transactions in the darker corners of the online realm. The turning point came in the early 2010s when Bitcoin's value rose significantly. 2013 and 2014 witnessed a staggering surge of over 5,600% in Bitcoin's price. This rise captured the attention of the broader investment community, triggering a shift in the cryptocurrency landscape. The increased recognition led to the establishment of many of today's prominent crypto exchanges, solidifying Bitcoin's role as an important player in the digital asset arena. From 2014 to 2020, Bitcoin embarked on several bullish runs, only to face subsequent bearish retracements. However, a pivotal shift occurred in March 2020 with the advent of the COVID-19 pandemic, altering the trajectory of Bitcoin's journey. Fast forward to the period between March 2020 and April 2021, and Bitcoin experienced a staggering surge of 1,537% in its price. Following a temporary retreat in the subsequent months, Bitcoin staged another impressive rally towards the close of 2021. CoinMarketCap documented a historic pinnacle, noting Bitcoin's price soaring to an all-time high of $68,879, though not for long. The year 2022 unfolded with a significant uptrend, but it swiftly gave way to an accelerated downturn, testing the resilience of Bitcoin as it approached the 16.2K support level. Now let's talk about the current landscape. In 2023, bullish momentum re-emerged, propelling Bitcoin's value upward by over 90% from July 22 to July 23, almost touching the 32K mark, which sounds like a good price. However, Bitcoin proved it could be better in 2024 as it experienced an astronomical increase. At the time of recording, Bitcoin is on the verge of breaking its all-time high, almost hitting the 70K mark. While it's not sure that this trend will continue, this is definitely a positive sign that Bitcoin is definitely worth investing in. However, let's not stop here. Let's delve into more phenomena that can likely influence your decision about inventions in Bitcoin. The halving event. Word on the blockchain is that come April, we're gearing up for the next halving event in the world of Bitcoin. Now, for those who might be new to this, the halving is a protocol that occurs approximately every 4 years or after the completion of every 210,000 blocks mined. The last one, you might remember, happened in 2020. But why is this such a big deal? Well, historically, Bitcoin tends to throw a party for its performance post-halving. The magic lies in the reduced reward that Bitcoin miners get for their efforts in confirming transactions and adding them to the blockchain. This halving event creates a ripple effect in the crypto cosmos. Now, this isn't just some random event. It's a core component of Bitcoin's monetary policy. Picture it as the guardian of inflation control, a master plan designed to gradually taper off the issuance of new Bitcoins until we hit that magical number of 21 million coins. The mining earnings are about to take a dip from 6.25 to 3.125 Bitcoin. Yeah, it's a big deal. And history tells us that these halvings have a knack for pulling off some major stunts on Bitcoin's price. Take the 2012 halving, for example. The price catapulted by a jaw-dropping 500%. And let's not forget the 2016 edition, which led to a price surge of over 280% in the following months. Fast forward to the 2020 halving, and voila, Bitcoin's value shot up by a whopping 500%. Now, the million-dollar question, or should I say Bitcoin question, could lightning strike again? If the demand for Bitcoin continues to surge, we might just witness another significant spike in Bitcoin's value. And here's the cherry on top. Top-notch analysts over at the prestigious Standard Chartered Bank are throwing their weight behind the halving magic. They're predicting that the price of Bitcoin could skyrocket to a mind-boggling $120,000 by the end of 2024. Yep, you heard that right. Well, judging by the current price of Bitcoin, this prediction might just be accurate. So, bottom line. Now, when we cast our gaze back, it's clear that the golden moments for snagging Bitcoin at bargain prices might be behind us. Take March 2019, for example. Those savvy buyers grabbed Bitcoin for $3,917 and rode a wave of approximately 1,479.7% appreciation over the next 5 years. Zooming further into the past, picture this. In 2015, Bitcoin was a steal at $357.24, and those early birds witnessed a jaw-dropping 18,822.66% increase in value compared to today. It's like hitting the crypto jackpot, right? Now, the big question. Does this mean the ship has sailed for new investors? Not necessarily. Even if you bought at Bitcoin's all-time high in November 2021 and haven't hit the sell button yet, fear not. You're inching closer to breaking even. Now, despite Bitcoin flexing its muscles with a robust rally and almost reaching its all-time high, the crystal ball isn't quite clear. There's still potential for some serious gains in the months or years ahead, but don't discount the chance of a swift decline that could be offset sooner or later. The Bitcoin journey is full of twists and turns, but it's definitely not too late to invest in Bitcoin. Years later, you might just be glad you did. Don't fade. Let's ride this wave together. Peace out.